friends. Sanjay here with KMF Business Advisors. I hope you guys are doing well. So, today we are going to talk about uh, addbacks on your profit and loss statement. What exactly is an addback? Basically, it's a context of a profit loss statement that refers to expenses added back to your net income on the financial statement. That being said, a lot of your personal expenses that you are taking it out from the business can be added back to your business income statement to show the profitability that your business does. So, what happens basically on the tax returns when you're filing tax returns? There are uh, certain fees where there's certain expenses that we put it on the loss statement to write off expenses. And that being said, so when you are ready to sell your business, you can actually refer to the profit and loss statement, and that is basically where you can defer the differences of where those expenses are coming back. And those expenses, you can actually add the value towards your business. Okay, such as the normal ones are like car expenses. So you have a vehicle that's probably like let's say you have a company vehicle, then you have personal vehicles that you put it on the tax returns to show it as terms of expenses. Owner salary, stock-based compensation, one-time expenses, restaurant, food, restaurant, gas, travel expenses, interest expenses, depreciation, amortization. So just to give you a basic idea, I'm going to share with you a couple of P&L statements so that you can get a general idea of what you can really write it off. So for example, this is one of our clients' account, basic P&L, you see. In the expense, they're showing rent. Okay, it's a dry cleaning store. Dry cleaning store, basically their main expenses are, the cover, the plastic cover, um, but I want to show you something what this client has done over here, and that is something that you can actually take it out from your expense and you can add it to your profit loss statement. You can add it back as a depreciation, add it back and make it a positive return. So for example, okay, the rent we know is an expense for the business, but cost of garments, okay, it's a dry cleaning place. Uh, Cost of garments, no. Basically, there's the catch right there. Okay, $8,000 a month. The client is writing it off 8,000 a month, which can be added back as a depreciation to your income, and then you can show that instead of showing it as an expense, you can add it back and show it as your profit. Not that you show it on the tax returns, but here, this is where you're going to show. So anytime you're planning to sell a business, right? And before you even share your tax returns, look at your P&L statement, share it with the customer, and that's basically how you're going to show the value of your business. This is, because what happens is when you submit the tax returns to the customers, then the customer is like, oh, okay. So, okay, you're doing $500,000 in sales. Oh, but you hardly make $50,000. Well, then you try to explain the customer, you know what? Yeah, it's 50,000 because I write off two of my cars. I do this, I do that, I do this, and so this is instead of really sharing your tax returns, this is where you start your first approach. Uh, Very, very highly recommended to do this. And this is gonna save you a lot of things future in the future. Um, business insurance, accounting, 1800, 150, employee tax, sales tax. Okay. So this is basically in this P&L. I could only come up with this one, which was, cost of garment. I'm like, no, it's not. It's not true. The other one that I wanted to show you was, let me see if I can find that one. Uh, 1 second. Okay, there was another one I had, which was very interesting. Let me see if I can locate that one for you. Okay, let me open it up. Okay, this one here, very, very interesting, and I hope that you can catch what the customer is writing off on this one. Let me see, where did it go? Sorry about that. Oh, where did it go? Oh, there it is. Sorry about that. So here's one, a really, really interesting one. Okay. Which is showing that the expense include rent, electric, tax, blah, 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 blah. All right. We got that. But look at this very carefully. Total purchase is $24,000. Total sales is $45,000. Lotto sales is $9,100 and total expense is $7,860, which gives you a net profit of $3,929. Now, what exactly is this customer doing here? What they're doing is they're adding the Lotto sales to their Addbacks, and you cannot, because in the Lotto sales you hardly make 3% of all the Lotto sales. The rest of the money goes to the state. So you got to be very careful. I mean, a lot of business buyers are not that. So you got to be very, very careful. You cannot add that. Okay, that's something that you cannot show, because if the $9,100 is removed from there, this will have a negative balance, and that's basically how much you're making on the business. You see, same here. So in this case, you are probably making like minus 5,000. Over here. You're probably doing like minus 6,000. So gotta be careful. Okay, you cannot fool the consumer. You especially somebody who wants to buy a business. So instead of reference total expenses, clarify it as much as possible. Because in this case, if you do it the way this is done, then this is not gonna work. If there's somebody who knows what they're buying, they want details, because 8,500 bucks, come on. I'm gonna tell you, the rent for this business is about 2,800. Electric, let's say $1,000, 3,800. Tax, what do you mean by tax? Property tax you're not paying because it's done by the landlord. Uh, Tax based on sales, it depends what you're selling. If it's a food product, that's non-taxable, and if it's cigarettes and this and that, that's taxable. But how much are you selling? If you're selling $44,000 in sales, where 70% of your sales is non-taxable and only 30% is taxable, then this number does not add up. Okay, salary, okay, that could be one thing, but this one, this is self-employed owner. So, okay, how much salary is probably taking? 5, 6,000 a month. So basically, when you are doing expensive expenses, make sure to jot it down as much as possible so that the customer understands. But adding lot of sales to your sales is not the right way of doing addbacks. on your P&L. All right. So I hope you guys understand that how to do P&Ls and how you add backs, how do you do the add backs on your P&L statements. So whenever you're ready to sell a business, you will have an exact understanding to your customer of what exactly is going on with your business before you share any other documents. All right. Thank you for watching. And once again, this is Sanjay Wadhwani with KMF Business Advisors. Thank you. Bye bye.